time has arrived where Greg should become the chief executive officer of the company at year end.
That there is one of my investing idols, Warren Buffett. He has led Berkshire Hathaway since 1965, and of course he's been investing since about 1955. From that time on, he has delivered Berkshire investors, on average, a 20% return per year. I mean, that is just so stunning. Basically made so many people multimillionaires. He is clearly one of the world's best investors, and earlier this year, in front of a 30,000 plus crowd, he announced his retirement. But that leaves Berkshire with a problem. It's a $1 trillion company, and they're going to be without their veteran CEO for the first time since 1965. So in this video, let's discuss what Berkshire looks like without Buffett and what happens next to that company. So what is going to happen to Berkshire once Buffett's gone? Well, first, I think it's pretty important to understand the company itself. Back in the 1960s, when Buffett took over Berkshire Hathaway, it was a dying textile maker. It was in a big mess, and the first thing Buffett figured out was if this company was going to thrive, he was going to have to diversify into something other, some kind of better businesses. And since then, Berkshire has acquired businesses like Geico and Burlington Northern Santa Fe, See's Candies, Brooks, Dairy Queen, and so on. And on top of that, they have a large stock portfolio holding businesses like Apple, Bank of America, Coca-Cola, American Express, and more, along with, right now, I think $344 billion in cash. So over time, this pattern of acquiring wonderful companies at fair prices has grown Berkshire into a three-pillared empire. The first pillar is the wholly owned insurance businesses. That's Geico, National Indemnity, Gen Re, etc. The second pillar is other wholly owned businesses like Berkshire Hathaway Energy, Burlington Northern Seas, and so on. And then the third pillar is their stock portfolio, and that includes Apple, American Express, Coca-Cola, and other public companies. So first, let's take a look at what the company looks like without Warren. What happens to all the wholly owned businesses once Warren is no longer there to kind of oversee things? Well, if you're a Berkshire shareholder, there really isn't anything to fear in this department. In this pillar, the truth is, Warren hasn't actually been very involved with these things for quite a long time. He acts more like an overseer than anything else, and each business Berkshire owns is run by its own independent management team. At the top level, for many, many years now, the insurance businesses have been looked after by Ajit, Jain, and the non-insurance businesses by Greg Abel. So this is all but confirmed in Buffett's 2021 letter to shareholders, where he said, quote, Berkshire owns a wide variety of extraordinary businesses. Though I don't understand much about the operations of the two companies headed by Greg Abel and Ajit Jain, I do know I have captured two all-stars who are first-class human beings as well, a quality important in managers and friends. So who are these two guys? Well, Ajit is often regarded by Buffett as one of the most important pillars at Berkshire. Buffett once said that most of Berkshire's success comes down to just a dozen key decisions, and hiring Ajit was one of them. And in his 2009 letter to shareholders, Buffett famously wrote, if Charlie, I, and Ajit are ever in a sinking boat, and you can only save one of us, swim to Ajit. But interestingly, Ajit isn't the one who's going to take over as CEO at the end of 2025. That job belongs to Greg Abel, who joined Berkshire back in 2000 when he acquired Mid-American Energy. He climbed the ranks, he became CEO of what's now Berkshire Hathaway Energy, and in 2018 he got tapped to oversee all non-insurance operations. Now, Buffett's repeatedly said Greg will be his successor, and that decision was formally confirmed at a shareholder meeting earlier this year. So while Ajit remains critical to Berkshire's future, Greg Abel is the one who's handed the keys to the kingdom. So the wholly owned businesses in Berkshire are already in good shape. Berkshire has a clear succession plan, that's all good. And in reality, these operations have been running smoothly with minimal input from Buffett for years. But the stock portfolio, now that's where things get complicated. With fewer opportunities to buy entire businesses at fair prices, Buffett has spent much of the last decade focused on managing Berkshire equity stakes, the minority holdings in high-quality, publicly traded companies. This is what he's most famous for, being a legendary stock picker. It's also the hardest part of his role to replace. I mean, after all, look, few people in history have compounded capital at 20% annually for 60 years. Buffett does have a plan for this side of Berkshire, and it's already in motion. At the annual meeting in May, Warren announced that Greg Abel, who has been Buffett's designated successor since 2021, and currently oversees the non-insurance businesses, Greg will have the final authority on capital deployment, including decisions on how to invest Berkshire's $344 billion cash reserve. Buffett has stated that Abel will have the final word on operations and investments, though Buffett will remain chairman and provide advisory input. Now, additionally, Berkshire's investment managers Todd Combs and Ted Weschler may continue to influence specific stock picks as they have managed roughly about 10% of the portfolio under Buffett. However, Abel's role as CEO will make him the primary decision maker for major investment decisions. Now, so what does all this really mean for Berkshire? If you're a shareholder, the main thing it means is there's no need to panic. Berkshire has been quietly laying out a succession plan for years, even before it was officially announced. Buffett has spent decades positioning the company to thrive without him. And today, there are over 60 high-quality businesses operating independently under the Berkshire umbrella, each with its own management. Now, that's a lot of built-in redundancy. Across all of them, Buffett has instilled a culture of long-term thinking and disciplined capital allocation. And that philosophy runs really deep at Berkshire, and it's embedded in every corner of the company. And remember, if there's a short-term bump, Berkshire sits on about $344 billion in cash. This is completely built to withstand challenges and is, at least for now, its fundamentals remain rock solid. Now, while the business is clearly built to last, what happens to the stock? That could be a completely different story. So what happens to Berkshire's share price when Buffett is no longer around? When he announced he'd stepped down as CEO, the stock dropped to just 5.5%. And that was just reconfirming information that had mostly already been guessed. Now imagine the emotional reaction when Buffett eventually passes away. While it's impossible to know for sure, it could be the case that we see a much larger kind of emotional knee-jerk sell-off, not because the business changes in any way, but because Berkshire loses its iconic leader. Now, why would that impact people emotionally? Because in the short term, markets are driven by this kind of thing, emotion, not logic. Headlines will sway investor sentiment, and today, a single narrative can move billions of dollars instantly. So I think when the day comes that Buffett's no longer at the helm, expect dramatic headlines and expect a lot of potential volatility. It's going to be everywhere in every single magazine that covers business. And even if nothing fundamental changes, those kinds of headlines alone, they could trigger widespread selling. Institutional investors might use that opportunity to rebalance their portfolios. And as the stock price drops, retail investors might start to, maybe panic is too strong a word, but could really see the retail people starting to go, well, it's been a great run. Some funds may even be required to reduce exposure when the legendary CEO departs. So the result, I think it's a pretty good possibility that despite Berkshire being rock solid, we just might see a steep drop in the stock price. But let's not forget something really important here. Buffett's own wisdom. We've been teaching this forever. In the short term, the market is a voting machine, very emotionally driven. In the long term, it's a weighing machine. It's going to get it right. And right after Buffett steps down or eventually passes away, the votes may be based on nothing more than that emotion. Just things have changed, I'm out. Over time, however, the market is going to inevitably focus on what really matters, the current value of all of those future Berkshire cash flows. And on those fronts, Berkshire is built like a tank. The business will keep generating massive cash flow. It owns some of America's most stable, most cash cow-y companies, from BNSF Railroad to Berkshire Hathaway Energy to Geico. And the publicly traded portfolio has included giant cash producers like Apple, Coke, American Express. And those businesses don't suddenly stop performing just because Buffett is no longer writing the shareholder letter. So think about it. Another notable business that just went through this period of losing its iconic leader, Apple. When Steve Jobs passed away, there was massive uncertainty about Apple's future. Is Tim Cook going to be able to carry the torch? What about the creativity side of the business? Would they continue innovating? And initially, when the transition to a new CEO was underway, the stock wobbled pretty big time. I mean, we bought it back then when it was like pre-split adjusted, it was at 90. And then what happened? It rallied like crazy. Because in Apple's case, what mattered wasn't just the genius founder, it was the quality of the business underneath that he had created. How many iPhones and MacBooks did they sell afterwards? How much cash did the company generate afterwards? That's what really mattered more in the long run. And that, those underlying fundamentals, that cash flow has driven Apple stock higher and higher since. The same thing will likely be true for Berkshire. That cash flow doesn't lie, and the transition may come with headlines and volatility. Ultimately, the underlying machine is so strong and so diversified and so well capitalized that the long-term trajectory still looks really solid. So yeah, the day will come, hopefully not anytime soon, but it will eventually arrive, and the headlines will eventually hit, and the market will eventually react. But if you're a long-term investor, this is the kind that Buffett has always spoken to, that he's cultivated, you're going to see that the real story isn't about emotion. It's about business fundamentals and disciplined capital allocation and the power of time. On those fronts, Berkshire's future remains really, really bright. Greg, Abel, Ajit, Jain are strong leaders, and I'll just say, you guys, we're more than willing to bet on them. And finally, before I give a sign off, if you'd be interested in learning the Warren Buffett Berkshire Hathaway style of investing from me and my team, we'd absolutely love it if you join me at our upcoming workshop. And we will teach for 3 days entirely online. We go through everything you need to know to become a Rule 1 investor like Warren and Charlie and me. We have over 25,000 graduates who are going to tell you that this is simply the best investing education in the world. We are #1 in the world, and we have the NPS scores to prove it, averaging 82. Far better than Harvard or Yale's MBA programs. Thank you very much. So please check out the links in the description and pinned comment to learn more. And I'll tell you, I'd love to see you there. And apart from that, thanks for watching. Now go play.